Hi everybody, this is Ken Calhoun from TradeMastery.com, the channel that's designed to help you become more successful in your trades. Now in this episode, you're really going to like it. At least I did, because we're looking at a lot of smart questions that traders asked during my Saturday Trading Week Ahead broadcast from May 6, 2017. So I'd like to answer questions that you folks have, any questions at all about day or swing trading that can help you start turning the corner and develop a more intelligent, thoughtful, specific trading approach that's more professional. So you've got questions, I've got answers, coming right up. A question here from Steven, and he asked a follow-up comment that I didn't post yet, but he was asking, Ken, I would like to see a video on for a new beginning trader on how to start day trading the correct way with a small account. That is an oxymoron. Day trading is not for broke people. Day trading is not for people with small accounts. The U.S. government instituted Regulation T, also known as the Pattern Day Trading Rule, back in the early 2000s, because so many people with small accounts were promptly blowing up their accounts because they didn't know how to trade. So they put a $25,000 minimum on accounts for pattern day trading. So you have to have at least 25,000 US, and from a realistic standpoint, I like having 35, 40K or more in my day trading account to work with. Day trading is highly risky, and it's speculative, and it's for well-trained, experienced people only, not for college kids on a budget. Despite what you may have seen out there with a lot of these penny stock or cheap stock, $3 stock traders telling people to use overseas brokers to get around the 25K rule, that is not only illegal but a really bad idea. If you're new to trading, you should instead focus your energy on education and learning and not risking live capital in the markets, particularly if you're a young person just starting off. It's a pipe dream to try and sell cheap stock, trading your way to a big fortune or something. That's a bunch of hooey. That doesn't work. What you need to do is, and again, not individual trading guidelines, this is just in general how I look at the market. I believe that in general it's better to save your money and paper trade only, and if you are going to spend your money, spend it on some good education. There's lots of free YouTube videos like the ones I post here, a good place to get started, or these free Saturday events, but one should not be trying to day trade on a budget. That ends badly. Ask anyone. That's why so many traders blow up. They're not properly trained, they're not properly capitalized, they're looking for shortcuts to easy money, and they blow up their account and lose all their money that they don't have much of to start with. So don't do that. That's like poor people in inner cities, and I feel bad for them because many of them aren't well educated and they don't know about a four-letter word called odds, O-D-D-S, but they go and waste their food stamp money on lottery tickets and hope they'll make it rich and their kids starve and all that kind of stuff. It's really bad. So I would say the correct approach is to only paper trade, swing trade, get education. One should not be day trading unless you have at least 5 or 6 years of successful swing trading experience under your belt. That's a very important distinction. So day trading, there is no correct way with a small account to build up to a proper account size. It's impossible. You can't do it. Despite what vendors out there in the cheap stock or penny stock arena would have you misbelieve, the truth is it's hard as heck, and most people blow up their trading accounts. So lots of risk. If you're in college or something, or a young person under 30, best thing to do is just to simply practice. Look at the charts go up and down. There's some great free charting websites like stockcharts.com or other platforms out there like Ninja, or lots of ways to learn how to trade the market, but do it for free before you spend money trying to actually trade. So that's my quick tip for that. Here's a good question from Mr. Lead Video. Hey, Mr. Lead Video, saying, how do I get into a stock if it explodes to either side? Don't you get a bad fill? My comment was, I only trade high volume stocks with small spreads, up to a penny or two, preferably using buy stop orders I set before I get into before it gets to an entry trigger. So if I'm day trading, I'll put a series of buy stop orders in my Interactive Brokers account before 9:30. So that way, once it triggers, it's automatic. It's on autopilot, automatically get filled. For my swing trades that I do mostly in my Fidelity set, I will use buy stop limit orders. So that way I may get filled, but I don't want to pay if it gaps up, say, over 10%, like a $5 gap up. So that's why I do not use blind, ungated buy stop orders in my swing trading account. I use buy stop limit order. So for example, and great questions too. Well, we'll look at an example in a minute, but if you're buying a new high for a swing trade, I use a buy stop order above the high with a limit of up to a point or so above it. So that way I get filled. If it does a little tiny gap or breaks out midday or something, that's fine. I'm fine getting the order fill. But if it gaps up, say, 5 points pre-market, I don't get filled, and that's correct, because I don't want to buy 5-point gap up. So that's why I do not use buy stop orders. I use buy stop limit orders. And that sets kind of a window of price action within which you'll get your fill. So I hope that helps. Hey, for all of you watching this on YouTube or here live in the Saturday event, feel free to post your questions or comments on the YouTube videos as well. And I will answer those briefly here and then also in our live event here on Saturday. So great to see so many of you here. See a question from TJ. Do I set time stops for my day trades to work out? What I do in my day trades is if it's going sideways more than 2, 3, 4 minutes, I will tighten in my hard stop to just a nickel or 8 cents under the inside. So that way, if the trade goes up and maybe I'm up, it's 10 cents or 15 cents in the money, or it's break even, or it's not, I got in but it didn't go significantly higher, I will just tighten in the trailing stop to within a dime of the inside market and let the random price action noise take me out. And usually it will. It may drop down a little bit and then I get the fill. So I release that capital back into my capital trading account. So the answer is yes. If I see at least 4 or 5 minutes, and that's a smart question, so thanks, TJ. I know you've been here forever, so thanks. If I see sideways price action for more than a few minutes in a day trade, just like in swing trading, if you see sideways price action more than, say, 4 days, 5 days or so, it's a good idea to tighten in, push up your trailing stop, to just within a point of the inside market, or the current day's low or whatever, so that you can release the capital back into your account. Because if it's not performing, it's like blank or get off the pot. Either go up or give me my money back, right? So if the thing's not going to run up, I want my capital back out so I can rotate that capital into a position that's more likely to produce a good return for me. So, smart question, thanks. I always have the smart traders here. You guys are amazing. I appreciate it. I always get such good, intelligent questions from you folks. So, a question from Vin. How do I avoid manipulated setups? Volume is your friend. That's another reason why it's one of my pet peeves. You see all these traders blow up their accounts this last few years with these moron kids out there showing, they use drone videos and they're showing lifestyles of the rich and famous crap, aka trader porn. It's like they actually do this. They'll go on trips and they show, here I am in a fancy part of the world by an ocean. Does anyone know what I'm talking about? It's kind of like those cheesy real estate commercials from the 80s. Some guy with like 6 bikini babes and he's on the beach in a yacht and saying, learn how to, I don't know, I don't know anything about real estate investing. But anyway, that kind of stuff does not work. To avoid manipulated setups, I trade high volume, at least 15,000 shares for day trade, at least 1 million shares a day. So 15,000 shares per minute for day trading stocks, and minimum 1 million shares a day for swing trading stocks. And that makes it much tougher for people to manipulate price. That's why so many, mostly these young people that don't know any better, and they're being taken advantage of and fleeced by mostly young guys who are trying to get people to trade cheap $3 stocks or penny stocks that are easily manipulated. If you're looking at what they'll do is they go and hunt charts that only have like 2,000 or 3,000 shares a minute, then they tell a chat room full of 50 or 100 guys, buy it now after they've bought it. That's illegal front running, and that's manipulation, and then they get all the guys to buy it, and as their poor victim traders are buying up a thinly traded instrument, they're selling to them, and that's called pump and dump or front running. So to avoid manipulated stocks, safety's in numbers, so I only trade instruments, like Seagate or Starbucks or whatever is out there that's got nice high volume, and that way they can't manipulate it as easily because you've got so many market participants. There's breadth as well as depth. So that's another safety tip, is don't trade thinly traded, low float, cheap instruments, because those are where the con men, the manipulators, seek to profit from their victims. So avoid cheap instruments. So safety in numbers, high volume. That's really important that you get that, okay? Because otherwise you get on the wrong side of it, and that's a bad thing. So that's the truth, right? If you know anything about trading, you know what I say is true. I'm not saying all these I agrees here from Mike and Paul and all that. Question from Long: does day trading make more money than swing trading? No, most people lose their shirts at all. So the equal opportunity blows up people's trading accounts. The risk is higher, and likely, depending on the share size, risk is generally higher in day trading. So the risk is higher in day trading. So, question from Valen: do I change my day trade strategy in the middle or late day different from the first hour trading regarding midday reversals? I never trade after 10:30, so that's why. I've got an edge on open range breakouts, the strongest charts that are likely to run up, usually between 9:35 and 10. If you're going to day trade, the golden time of the week is 9:35 till 10 o'clock, Tuesday, Wednesday, Thursday mornings. That 90 minutes or so of time spread out over 3 days is the right time to trade. I do not trade middays and I do not trade late day because that's choppy and that ends badly and your odds of success are greatly diminished. So I think you're almost guaranteed to fail if you try and trade after 11 o'clock. So, and I try and get I pressure myself to get most of my day trades done by 10 o'clock, as late as 10:15. The only exception is if you have a rare rally stock market that's running up all day long. And that may be 1 out of 100 days. But the vast majority of the days, your action is going to be the first 30 minutes of the market open, Tuesday, Wednesday, Thursday. So it is what it is. Hey, thanks, Trey. A question from Wynn: do I ever trade options like credit spreads? No, I don't like blowing up my trading account. But I don't tell people, don't trade binary option spread, all this derivative crap out there, because that's like going into a Vegas casino and walking up to the roulette table and say, really? Don't you guys know you got a 5.6% house disadvantage and you're going to lose your money? They're going to say, boo, go away, we like losing our money. So I try to politely suggest that one should not be trading derivative crap instruments, should not be trading cheap derivative crap leveraged instruments. I like steady uptrenders that generally work out. That's just my bias. So, and that'll do it for another episode. Thanks so much for watching. Be sure to leave your comments or questions in the area below, and I will answer the questions briefly in the area below, and some of them I'll answer even live during the Saturday live webinars as well as these videos. So be sure to ask comments or questions below. Subscribe if you're not already subscribed. Hit the like button, and I'll see you guys in our next episode. Until then, trade with passion, trade with little tiny stops, and try to make as much money as you can in your active trading. Until next time, best wishes for success in your trades. Goodbye.